The next one we'll be looking at, this is important, is the Purchasing Managers Index, the PMI. If you have been following me on my daily currency call, you will hear me actually mention the PMI quite frequently, very frequently in fact, because these PMI numbers come out on a monthly basis telling you across the board in different economies what the likelihood, what the leading indicators of the market could be. The Purchasing Managers Index is a survey. It's a survey conducted towards businesses on their current business condition in the manufacturing, in the non-manufacturing, in the services, and in the construction sector. It is a leading economic indicator. It shows the recent and possible future changes in the economy. If you remember that PMI results are going to be based on that 50 mark. They indicate that if it's more than 50, it actually indicates a growth or an expansion in the industry. If it's less than 50, it's a reduction or a contraction of the industry. So remember, PMI numbers comes back to that 50 line. If it's above 50, it's an expansion or growth. If it's less than 50, it's a contraction or reduction of the industry. So how does this 50 number come around? It's actually through these questions that's being surveyed into the companies. They ask them about business activity, about new businesses, about outstanding businesses, employment, prices charged, input prices, and business expectations. With all that put together, it is calculated. You can see in this example here, it went from business activity went from 55.9 to 55.7. So it's an expansion, but it's slow. It's a slowing down of expansion. Or new businesses going from 56.9 to 57.9. It's an expansion and at a faster rate as well. All that put together and calculated comes to that number of whether it's over 50 or under 50, giving you the idea of whether it's an expansion or in contraction. So this is applied across all the different industries: manufacturing, non-manufacturing, services, construction, and services and construction. So it's all put together to tell you where the market or where the economy could be heading in the short and medium term. This is a monthly number. That's why I say it's a short to medium term. Here's an example. Here's an exercise that we should work through. First example here, pound, GBP, manufacturing PMI. You can work through this together with me. It was 48.3. Previous data was 48.3. Expected to be 49.1. And it came out at 53.3. At this point, when you start looking at this news, and when it's being released, you will be thinking, is this good or bad for the economy? Does this indicate an expansion or contraction? So based on what we went through just then, 53.3 is better than forecasted. 53.3 is better than previous. So we can see that this is good for the currency. And 53.3 is more than 50. So it shows an expansion. Hope that makes sense to you. The next example, the next exercise I have, USD, ISM manufacturing PMI was 52.6, expected to be 52, released at 49.9. So you can see here, 49.9 is worse than expected, and worse than forecasted, and worse than previous. So you can see that this is bad for the currency. This is likely to be bad for the currency. And 49.4 being less than 50 is likely to, or is indicating a contraction in the manufacturing PMI. The third one, pound construction PMI, was 45.9, forecasted 46.6, released 49.2. Is this good or bad for the currency? Quite straightforward. It is better than forecasted. It is better than previous. So it's good for the currency, but it is still in contraction because it is less than 50. So when you're looking at a news like that, you would expect to see the pound US dollar strengthen slightly because it is good for the currency. It is better than previous. It is better than expected. But why I say increase slightly is because the construction PMI is still less than 50. It is still indicating a contraction in the overall construction economy or the construction sector. Second last one, pound services PMI was 47.4. Expected, forecasted 49.1. Released 52.9. So you can see that the services PMI went from 47.4 to 52.9. Is that good or bad for the economy? I hope you're saying good, because 52.9 is a lot better than previous at 47.4 and also better than 49.1. So it's good for the currency. And what you also should take note is that 52.9 indicates an expansion. So you would have seen that services PMI went from 47.4, which was a contraction, towards 52.9, which is an expansion. So at this point, I would expect to see a big move upwards in price for the pound US dollar as we see services PMI go from a contraction to an expansion. The last exercise, US dollar non-manufacturing PMI was 55.5, expected 55.4, and it came out at 51.4. Is this good or bad for the currency? I think you're pretty clear right now. It is probably going to be bad for the currency, but it still indicates a small expansion. So you would think that at this point, or you expect to see that at this point, the US dollar might increase, but not as much. Or it might even drop because it looks like it's a rate number. It might drop, but not as much, as it still shows an expansion in the non-manufacturing PMI. So in this scenario, the last scenario there, you'll probably not expect much changes in pricing of the US dollar. Not every news release, this is an exercise where I want to also press upon you that not every news release is something that you must jump into a trade for. Not every news release is something that you must trade with, because sometimes at 55.5, 55.4, and 51.4, prices are not always going to jump significantly enough for you to jump into a trade. Okay, so because of that, I hope that you've gone through the exercise together with me. I hope you understand what PMI numbers is. And I'll share with you that these PMI numbers apply to the pound, focus mostly on the manufacturing PMI and the services PMI released monthly. The euro, manufacturing PMI and the services PMI released monthly. The US, manufacturing PMI and services PMI. And you see this is a bit special. We have the Chinese yuan, manufacturing PMI being released monthly as well. So it is going to be quite straightforward. The GBP, manufacturing and services PMI is going to impact the pound. The euro, manufacturing and services PMI is going to affect the euro predominantly. The US, manufacturing and services PMI is likely to, well, is going to impact any currency pair with the US dollar backing it. But what is the Chinese yuan's manufacturing PMI going to impact? I'll give you a moment to think about that. What is the Chinese yuan's manufacturing PMI going to impact? Which currency? I hope you said Aussie. I hope you said Aussie US dollar, because the Chinese manufacturing PMI does have some impact on the Aussie US dollar. As we shared on the previous session, Chinese and the Aussie and the Australian economy are good trading partners. They trade between each other a lot, and that's why as we see an increase, if we see an increase in manufacturing PMIs from the Chinese economy, we are likely to see some positive impact onto the Aussie dollar. I hope that makes sense to you. We've just gone through the employment data, household employment data. We looked at the non-farm payroll, non-farm employment change numbers. We've looked at consumer sentiment. We've looked at PMI numbers for businesses. So we're almost halfway up the pyramids. We're almost halfway up. We went through the first two ranks already. We'll look at the third rank now.